Indian equity markets have been on a steady uptrend over the past 1 year. Since July 2022, the Sensex and Nifty 50 indices have surged around 20% each. The mid-cap and small-cap indices, meanwhile, have rallied up to 30%. The gains have been on the back of foreign portfolio investor flows, who have been net buyers in 8 of these 12 months. Moreover, stable macroeconomic conditions, with inflation mostly in check, supported the momentum. While the indices have given a good performance, a lot of stocks turned multi-baggers during the period. Therefore, those who have been in the markets for a year are sitting on meaningful returns. But what if you missed riding the upswing? Is it too late to start?
Things like waiting for a correction, etc., is not easy to do. In fact, lots of analysis and studies suggest that waiting or trying to time the market does not really add much value. So my recommendation would be that try to invest on a regular basis, especially with a long-term horizon in mind.
That said, this 20% gain at the headline level wasn't a one-way rally. Between December 2022 and March 2023, the benchmark indices tumbled up to 10% amid Adani Hindenburg research row and banking crisis in the US and Europe. Tridib Bhattacharya of Edelweiss AMC thus cautions investors against further volatility.
That overall this year should be used, or this year's volatility should be used as an opportunity to invest in preparation for the rebound, which will likely ensue over the next 2 to 3 years. Since last November, the markets, because they just hit all-time high, have been by and large flattish. It could be another way to think about this. But if you look at from a company standpoint, in the last year, the earnings have grown anywhere between 15 to 30%. So clearly the valuations today are a lot more reasonable 1 year forward as opposed to a year ago.
Bhattacharya suggests these 5 themes to bet on.
First, basically, we think that a strong private sector capex is up in the horizon. Second, we think that the real estate sector could be sort of, in the middle of an upswing for the next 5 to 7 years. Third, we think that overall defense could be a strong area from an investment standpoint, from a multi-year perspective. Fourth, we think that lending financials could be a good place to be overall from a couple of years standpoint. And finally, we do think that China plus one could be a pertinent theme to play.
In a nutshell, long-term investors could still enter markets on dips and add quality stocks across sectors. Today on July 13th, investors would react to India and US's CPI inflation data along with Q1 FY24 results of TCS and HCL Tech, released post-market hours on Wednesday.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's about to land his dream job. Business Standard.